All right, let's dive into this explainer. Equinor's Q2 2026 report just hit the wire. And guys, we are looking at massive macroeconomic shifts translating into cold, hard cash. If you want to understand the exact state of global energy markets right now, this is absolutely the stock you need to be watching. But hey, before we get completely lost in the spreadsheets, take a look at this. This is what actually drives that capital. We're talking hyper-efficient, massive steel structures operating in literally the harshest environments on Earth. So here's our roadmap for today. We're going to hit the Q2 financial highlights, the operations driving the growth, their strategic expansion in new fields, power and low carbon, and finally, strong returns and low debt. Okay, part 1, Q2 2026 financial highlights. Let's look at the numbers. And here is the headline figure, a staggering $12.99 billion net operating income. Boom. Driven largely by surging global liquids prices, Equinor basically executed a masterclass in positioning to capture immense top-line value. And backing up that income, a massive production rate of 2,165,000 barrels of oil equivalent per day. That 3% year-over-year equity production growth, it proves they aren't just riding high prices. They are physically dominating market delivery right now. All of this translates to a mighty $7.68 billion in operating cash flow. And look, even after handing over $6.4 billion in Norwegian taxes, they're left with a literal war chest, giving them ultimate financial flexibility. Now check out this macro dynamic. It's fascinating. You've got surging liquids prices at nearly $98 a barrel, and that easily overpowered the drag from tumbling U.S. gas prices, which were sitting way down at $2.30. This is exactly the kind of resilience you want to see in a diversified, liquids-heavy portfolio. Moving right along to Section 2, operations driving the growth. Where's all this energy actually coming from? Well, geographically speaking, the lion's share of the income is generated right at home. Look at this breakdown. With over $9.1 billion in adjusted operating income, E&P Norway is without a doubt the absolute engine of their entire portfolio. And to really grasp the strategy here, you got to look at what CEO Anders Opedal is saying. He anchors this success directly to global demand amidst intense geopolitical tension. Equinor isn't just pumping oil. They are a critical pillar of European energy security right now. Okay, Section 3, strategic expansion and new fields. Let's see what's next in the pipeline. Because, that 4% Norwegian growth, absolutely not an accident. It was fueled by highly targeted ramp-ups at Johan Castberg, plus tiebacks like Simra and Iren. And don't forget the final investment decision for Greater Peaja out in Angola. That move locks in massive international value for the future. Let's pivot to Section 4, power and low carbon. How are they handling the transition? So they've got this strict safety and emissions reporting. We're talking a 0.25 serious incident frequency and 5 million tons of Scope 1 and 2 emissions for the first half of the year. And guys, this isn't just PR. Operational excellence on this front directly protects the bottom line from regulatory sector risks. Drilling down a bit more, their upstream CO2 intensity is sitting at just 6.0 kilograms per barrel. That gives Equinor a huge competitive advantage over sector peers, especially as global carbon pricing becomes a much harsher reality. And when you actually look at the power segments, renewable generation is basically outpacing total power growth. It's up 11% this quarter. They are systematically building a serious foothold in the energy mix of the future. All right, final piece of the puzzle, Section 5, strong returns and low debt. Let's talk balance sheets. Honestly, this might just be the most incredible metric of the entire quarter. 10.4%. They slashed their net debt to capital ratio all the way down to 10.4% from 17.8% in just a matter of months. Their balance sheet is an absolute fortress right now, offering aggressive downside protection that easily outpaces most of the sector. And with debt plummeting, they're aggressively rewarding shareholders. They're maintaining a steady 39-cent quarterly dividend and executing a massive $3 billion share buyback program for 2026. I mean, that is incredibly efficient capital return. So I'm going to leave you with this question to chew on. As Equinor continues to generate staggering wealth from fossil fuels and fortifies its balance sheet to unprecedented levels, how is this immense capital advantage going to shape their dominance in the global energy transition? They've got the cash. Now we just watch how they deploy it.